Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 29th of December 2023. This is the final trading week of the year. We have the new year beginning shortly. First chart is the US dollar index futures. Now you'll notice in all the charts today that volumes are particularly low. They're holiday volumes. There's not a great deal of activity in the market. There's not a great deal of effort or force behind the trading, and there's very little intent being shown. So the markets often absorb supply and trade sideways during this week, and the bigger moves, if there is one to be made, will be made relatively early in the next year, often the first week, but not always. So this is the US dollar index futures. You can see the volumes were low. The most important line at the moment comes through here, and this week saw some buying support emerge. Price did sell down modestly, but you can see that the close well off the week's low suggests that some buying support did come in. We're anticipating that there'll be some buying support emerge adjacent to where price found support previously in the background, and that appears to be happening this week at least. Put some more lines in so we can exactly see where the market is. This is the highs of the range. Here was the breakdown. Had another line that came through there. And the market's trading quite logically. You can see price broke down. It moved its way to the next lower level. Price then pushed up. It wasn't able to push above this level, and prices come down again. Just moved below this line, and it's attempting to find support adjacent to where support had been previously found in the background. So that makes a lot of sense. This level down here is about 99 and just above 102 at the highs of the range. And I expect the market will make a reasonable attempt to support in this level. That's not to say that it will be successful, but there'll be at least a decent attempt made to support the market between 99 and 102. And that is what happened this week, although you must take note that it was on very low volume this week. When volumes come back early next year, then we'll see really what the market is saying about itself. Next chart is the E-mini S&P. This is S&P 500 index futures, and the market is trading at all-time highs or very close to them. This zone to the left represents where the bulk of the supply in the background lay at the previous highs. There's a little bit of fluff above it, but not a great deal of supply has been expected there. Now this week, the spread was very narrow, despite the US dollar recovering somewhat and seeing some support come in. This market just traded sideways roughly with a very narrow spread on very low volumes. This was a sideways bar. Now, I won't be surprised if this market does come back and test this level from above for strength, the highs of the range here, before there's any attempt to push higher. It doesn't look like a great deal of supply is coming in at the moment, but I won't be surprised if the market does come down, tests this level here, and then moves higher in response. US Treasury 10-year note futures. They're trading up here, adjacent to this congestion in the background. Next level comes through there. The last 2 weeks have seen reducing volumes, well below average. You can see the market is just in absorption mode here, trading sideways and absorbing supply. The higher tail this week probably reflects the recovery in the US dollar to some degree. No great supply is being drawn out and no great damage has been done to the market at this point. Copper price futures. Copper price futures are trading just below the lows of this range and just below the highs of this range, right in here. And it does appear that the market continues to absorb supply in preparation for a push higher when trading conditions are more favourable. At the moment, there's just absorption taking place just below this level through here. There's no great weakness being shown. You can see volumes are reducing considerably over the previous 6 weeks, and that would suggest to you that supply is reducing. If supply was being drawn out, this market would move lower in response. There's little doubt. It's just holding on, trading sideways, just below the highs of the range here, and that would suggest that the market is absorbing supply through here and probably in preparation for a push higher in response. I do anticipate there will be supply drawn out to the left here, so the more absorption that can take place down here, the less supply there's going to be on the initial push higher. Gold price futures. Here's the lows of the range. You've got a little shakeout here and a multi-bar shakeout here, which responded positively, as you would expect. Here was the highs of the range that developed from that. There was a little test coming back into this shakeout. Price then responded higher. This was a little bit of a mystery as price accelerated and then rammed lower. I do feel as though this may have been due to the market wanting to remove supply. And since that bar, price has traded in absorption mode. And although volumes have been falling, price continues to move higher. And it does appear that a lot of supply in the market was removed in this bar here. And I wonder if that was the intention behind it. Because something was going on, there's no doubt about that. It was certainly unexpected. There was initially euphoria as price surged higher, and then a lot of people said the market was completely broken when it then rammed lower. But it only came back to this breakout line here, which is actually quite a logical level. Then support was found. You can see the test for supply below that bar's low, back into this zone here, and then prices moved into absorption mode since then. That makes some pretty good sense. If trading conditions aren't favourable in the near future, look for a secondary test of this level before any attempt to push higher. And if trading conditions do become more favourable, then I would expect the market to continue grinding, sort of in this level here, trading through here like this in absorption mode. And that would see the market trading with a pressing nature towards the upside, sort of like this. At this stage, no damage has been done in this market, despite this bar. Silver price futures have not been as strong as the gold market more recently. That's the lows of the range, and this reflects where the gold market had the multi-bar shakeout, just sideways trading in response, because this wasn't really a shakeout. This was the market being dragged around by the gold market. Here was the breakout line here. You can see price gapped up through there. There was nowhere near the same surge higher as there was in the gold market, but when the supply was drawn out, this market really rammed lower. Gold market found support at this level. You can see how far down silver moved. It's a much more volatile market when prices are moving like this. And there's a bigger retail component in this market. Price did recover and push back to this level. This is the important level here. But there was no demand to move higher here and a test for supply in response this week. So price still remains below this level. It hasn't recovered it, whereas gold is trading like through here like this. So this market's lagging a little bit. But if gold continues to move higher, even if it's grinding higher, this market will be pulled up along with it, at least to some degree. But at this point in time, this market is a little behind gold and it's struggling to get past the 24. Light crude price futures are down, attempting to find support at this level here. The market appeared to be finding support through here. And this suspicious looking bar turned up unannounced. That forced price lower and pretty much adjacent to this congestion to the left where the market found support previously. And I expect the market overall will probably trade sideways through here and attempt to recover. This week's bar does look suspiciously like this bar to some extent, where the market was finding some support and the trading was relatively positive, and it was slammed again this week. Or perhaps not slammed because volume was low, but price was pushed lower this week. In response, I won't be surprised to see a bar that's trading something like this, with a narrower spread, dips lower initially, recovers slightly, and trades just above the 71.5 level, somewhere through here, like this. This is the Euro US dollar currency futures, and they've been trading fairly consistently more recently. You can see the lows of the range come through here like this. The market pushed higher, tested for supply with a very narrow spread, which is exactly what you would like to see. In response, price pushed higher again. There is a shelf that goes through there like that. Price pulled back, tested this level for strength, and has accelerated higher again. And this week, price has really traded the inverse of the US dollar, which is exactly what you would expect to see. The US dollar effectively tested for supply, and this market has produced a little upthrust on low volume. It's more like a no demand upthrust, if you like. And I think you'll probably find that price will probably dip back and test this level here for strength. Comes through there like that. And if the US dollar continues lower, well, this market will move higher. If the US dollar does find more support, I think the market will trade more sideways. British pound currency futures, very similar to the euro in some respects. A little bit more compressed, this chart. Here's price pushing higher. The test for supply was a little deeper than in the euro. The market did respond higher in response. There's a shelf that comes through there, and that's pretty much caught this market more recently. This week's bar was a little more positive than the euro, which really closed low in the range. This has closed in about the middle. Volume or activity was very low. There was no great intent being shown in this market or in the euro market. We'll just have to wait and see what happens early next year. Here's the lows of the new range. If supply is drawn out in this market, which means that strength to some degree continues in the US dollar market, I expect this market will pull back to this level. But if the US dollar continues lower early next year, this market will push higher in response. Aussie dollar currency futures have looked a little more strong recently. You've got this congestion in the background here where price traded sideways for an extended period of time, and the market hasn't been as strong this week as price pushed above this level. It did trade the inverse of the US dollar. Volumes were very low, so it's difficult to make a clear decision on what may happen in response. But similar to those other markets, if the US dollar continues to find support, look for this market to trade sideways or just a little lower. And if the US dollar continues lower, this market will probably edge higher. I don't think it will accelerate higher, but it will continue to grind higher. Bitcoin futures are trading sideways in consolidation mode at the moment. I've got this pulled back a little bit so you can see more clearly how the market's trading. This is where I've anticipated supply to be drawn out from the left in this congestion zone here. There was always likely to be some supply trapped in this level, and you can see how the market initially treated it, absorbing its way into that zone, then accelerating higher with some intent, and then moving into consolidation mode here, which is the market absorbing supply and trying to buy any sellers who are wanting to sell at this level prior to an attempt to move higher. I don't expect supply will be as strong as price moves higher. There will be a little supply in here, but then it reduces considerably as price moves higher in response. I'm not seeing a great deal of supply being drawn out. There is selling pressure, but it's being absorbed, and it's being comfortably absorbed by the market at this point. You can see that spread was relatively narrow this week, albeit that volume was up near average. Most markets traded with a very low volume this week. So this market did have quite a bit of activity. Supply was being drawn out from the left, and that's anticipated through here. But the market with a very narrow spread like that is showing you that the supply that was being drawn out was being absorbed or bought relatively comfortably. Now, sometimes when these markets go through an extended period of consolidation like this, you'll get a little mini shakeout in response. It will look something like this. And then price will move higher. And if the market is really strong, you'll just see the market push higher without any shakeout. A little pullback like this is the market's way of threatening any further sellers in this level to just come out and sell before they miss out on these higher prices. And then when there's no supply there, or when the supply has been absorbed, the market springs back very quickly and then accelerates higher in response. And it's like a terminal shakeout of this little period of consolidation. And you'll see that quite a bit, but then some markets are just too strong and it costs too much money to push price back like this. And those markets usually just accelerate higher like that. Okay, back to the US dollar just quickly. This is where a lot of the market moves are reflected. It's pretty clear that some modest buying support emerged this week, adjacent to where price found support previously. Very low volume suggests that there was no great absorption or buying this week. It was very modest, and price could easily be overwhelmed if supply is drawn out next week. I really won't be surprised if the market does test the strength of the 99 to 100 level at some point. So you may get a bar that looks something like this, which would show you that overall the market continues to find buying support being drawn out. However, the initial push lower here would be quite threatening to the market, and you would see these corresponding markets move higher in response before the recovery comes a little bit later in the week, and that would then see those markets trade with a low close after trading higher initially. So this would be quite threatening to the market, and it would see price testing down in this level, where I think the market will test the strength of the market at some point. So just be aware that even if you had a market that dipped lower initially and then recovered, the dip lower would be testing the strength of this zone down here, which I think may get hit at some point, at least in the near future. Okay, thanks for your time. Enjoy your time off. We'll see you again next year. Thanks again. See ya.